Welcome back. We're going to be talking about Titan now, which has come out with its third quarter numbers. Now, ladies and gentlemen, if you remember, last month we did have the operational update from Titan, right? It was a dazzling performance, particularly when it came to its jewelry business. What the street was watching out for was what would the margins be like? And boy, oh boy, has Titan delivered. You know, you've seen EBITDA coming in at 14% plus, a 290 basis points rise year on year. So we're going to be talking about that and more with CK Venkataraman, the Managing Director at Titan. Good morning. Thank you so much for joining us. You know, like I said, the street was watching out for that margin figure. On most accounts, you have beaten the street estimates and higher than what most analysts had expected. The big question now is it going to be sustainable going forward? Should the markets get used to these kind of margins?
I'm not sure about that, and frankly, we are not so much focused on that. Like I said on the call yesterday, the opportunity for growth in every one of our businesses is so high, in jewelry very much so, in eye care and so on. And the scale advantage that we got in quarter three was one big driver of that margin expansion that you referred to. And some of the margin expansion also came as a result of some one-time advantages that we got in the quarter. So to that extent, that part of it will certainly not repeat. But the rest of it is linked to scale, and we are pushing for growth. And if the growth comes with that the scale, then obviously the margin to that extent will keep coming.
Mr. Venkataraman, in that same conference call, you have talked about opening one offline store every three days. I remember the last time you were here on ET Now, you were talking about how Titan is seeing growth in many smaller towns. Is that the plan? Is that what you're going to do, opening a store in smaller towns? And how should the market read this along with the digital push that the Tata Group is doing at the group level?
Actually, some of the categories that we are into, and particularly jewelry of high-end and eye care, are not that amenable to a remote purchase. You need to, in jewelry, there are many people involved in the purchase, the ticket sizes are very high, and you end up, and the customers are typically older, not the typical online online buying profile. So to that extent, an eye care is where you need to test your eyes. The technology is available for remote testing of eyes is not yet that mature. So therefore, the need to go to a store in jewelry and in eye care is very high. And therefore, the thrust for stores will continue in the company, even in watches. Finally, not everyone is, even if they buy online, often they look at the products in the store, spend some time and come back and maybe look at prices everywhere and make a purchase. So to that extent, retail stores are a very, very integral part of Titan Company and even the Tata Group. So the digital thrust, in a way, is sitting on top. For example, the loyalty program related work that we do in Titan. A lot of that is done digitally, even as the sale of the company happens substantially physically. So to that extent, the integration of all the company's loyalty programs, the points and all that which Tata Group is doing can completely coexist with the huge thrust that each company and companies like Titan are doing on the physical front. And our thrust is both deep in terms of towns, which you're referring to from my earlier conversation, as well as within the cities as well. Particularly eye care, because of the radius in which customers typically like to purchase, because we may need to go 2-3 times to an optical store to get your specs right, and therefore customers prefer that their optical store is not too far from where they live. So to that extent, the number of stores that we need to have in our optical business, in our eye care business, in a city like Bangalore or any city, would be more than, for example, for watches. So to that extent, the extent of distribution in a Bangalore on the one hand, and going to a town like Ramanagaram in Karnataka deeper both are driving the expansion of the network.
Right. So, Mr. Venkataraman, you're standing by, you're saying, with your guidance of new store addition?
Yeah, very much. And this is not, we've actually not at all let up on this, even through the last 2 years, CY20, CY21. But for the physical problems that we would have had during parts of lockdown and all that, the opportunity was there, continuing to be there. The franchisee interest has been there and rising. So, we're going to really step on the gas on expansion.
Sure. Okay. So, what I want to understand now is, A, what the studded jewelry has done in particular, considering that's a high margin business, and B, what's the visibility going forward purely on the jewelry segment? Because while the previous quarter had the advantage of festive season and the wedding season, this coming quarter will not.
Frankly, I don't look at quarters. I look at year, 2, 3 years at a time. That's the manner in which people at top team in any company should be looking. So when I look at it from a 1 year, 2 year, 3 year point of view, the opportunity is huge. We are still a mid single digit market share at best in this industry. Certainly in CY22 and perhaps to some extent even in H1 of CY23, some of the advantages that the jewelry category has had in CY20 and 21 will continue to play. One is the restricted scope of weddings, the kind of things that people would not be spending as much on, like catering, the wedding hall and stuff like that. And therefore, the share of wallet that jewelry will enjoy within the overall wedding expenditure, that's one big thing. The second is the total or virtual total absence of international tourist travel. And there is a very high correlation between the absence of that and diamond jewelry particularly. So these conditions are favorable. On top of that, there is an overall economic advantage, particularly among the type of customers that Titan Company is dependent on. Their household savings are estimated to have grown in excess of $100 billion in the last 2 years because people have been sitting at home, not socializing, not buying many things. And that money, which is a lot of money, is available for any innovative company to dip into. The third is the wealth effect. In the last 2 years, the market capitalization in this country has grown by in excess or close to 1.5 trillion USD, and people are all feeling good about the wealth that has increased, for them. And therefore, the overall enabling conditions are very, very strong for the next at least 2 years. The third is that the formalizing in the industry and in the jewelry industry, and since you asked on that category, the formalizing is accelerating. There's a lot of supply chain and financial constraints that many of the independent jewelers are feeling, and therefore that is to our advantage. Plus, for various reasons, including the goodwill increase for the Tata brand, the acceleration towards trusted brands and brands like Tanishq particularly is even higher. So everything put together, I think CY22, CY23, very, very confident about the growth in the jewelry business.
Raman, good morning. Let's also talk about the eyewear profitability, because here you've seen a good turnaround. There's been a strong year-on-year growth over the last 2 years as well. So how sustainable is this, and what kind of further investment are you looking at within the eyewear segment?
Actually, the eye care, and we call it the eye care division actually now, the eye care division went through a rough patch in CY 18, 19, and most of 20. And there was a lot of changes that we made, and all of us actually started with new roles late 19, early 20. And the new team in the eye care division sort of went deep down, line by line, from the price all the way down to the last line on cost, identified things that were not really contributing not adding value to the operations of the company, and in a way took the advantage of the COVID situation of low scale to fix many things. And by January of 2021, or even last quarter of calendar 20, many of these things had been identified and nailed down. And through the whole of CY21, the team delivered all those improvements line after line. And the overall ownership of margin, cost, and the balance sheet, that ownership was institutionalized at least 3 layers in the company from the CEO down. And that is what is resulting in the exceptional profit transformation performance of that division. And now that the world is starting to become more or less normal, Omicron, COVID wave 3 notwithstanding, the division is now going to focus a lot on growth, because that category is a category forever. In fact, the opportunity is increasing, unfortunately, because of all our obsession, and particularly the young people's obsession with the devices and the myopic, refractory problem is increasing in the country, and therefore the opportunity for us to play a big role through multiple, interventions. So the growth is certainly the big mantra, and the investment behind the growth in multiple ways, through networks, through product innovations, through marketing communication innovations, through brands, sub-brands, all that is on the cards in CY22.
Okay, it all sounds very optimistic, and brokerages are also of the view that international expansion in jewelry is going to be another key driver. What are you looking at on this front?
It's a very, very exciting opportunity. We went outside India way back in 2007, and at that time, for various reasons, we had decided to target the mainstream American consumer. And unfortunately, the global meltdown happened at that time, and we had to shut shop and come back. Now the strategy is entirely different. It is an NRI PIO strategy. We began with our first store in Dubai in October of 2020, and it's been a fantastic run. And we are dreaming very big, but in the context of the NRI PIO opportunity, all of us are aware that the NRI PIO, particularly in the North Americas, is 100,000 plus USD per capita household income segment, right at the top in that country. And they're also very, very, and particularly in the last decade and more, very, very attached to the home nation, very proud to be Indians, celebrating many things, festivals, weddings, in the Indian way. And the Tanishq brand is very, very strong in them, and they're all waiting for the brand to open the stores and, of course, do an omni-channel play as well. So like I spoke yesterday on the call, the GCC, which is the Gulf Cooperation Council countries, and the North America will be our priority in the next CY 22, 23, 24. And we're looking at big, 20 kind of stores in this period.
I'm asking a separate question. Can you tell us which cities? The big...
Exactly which cities, I'm not too sure, but certainly, New Jersey is going to be our first store, and then Texas, perhaps Chicago, Bay Area, certainly, a couple of cities in Canada. So we're in the, New Jersey is certain because the work is already on, but the rest are, for example, is it Austin or Dallas? It's, one is not sure at the moment, for instance, or which city in the Bay Area itself. So work is on, a lot of exploratory work, conversations. The other big advantage that Titan has is a huge franchisee base in India. And some of our Indian franchisee partners are already now partners outside India. For example, the Dubai second store is held by our Bangalore franchisee. The New Jersey store is going to be from our Punjab franchisee, and so on. And it's jewelry is also a little bit an ethnic business. So we will have our Punjabi franchisees running our, one store, maybe our Andhra or a Telangana franchisee running another store, and so on across the US and Canada and the Gulf, of course.
You know, it just makes so much sense as well, just given the brand value of Titan and all the cities and states you mentioned, led by New Jersey, of course, a big encatchment of NRIs and those who are already familiar with it. Clearly interesting times ahead, big
And
expansion plans in
just 30
India and
seconds.
overseas. Mr. Venkataraman,
Just 30 seconds on this. I was in the US in New Jersey in November of 21, 3 months back, and I met lots of women there of various generations and various vintages from an NRI PIO point of view. And everyone is just waiting for Tanish to come.
and you are going. So all the very best to you and everyone at Titan. Thank you so much for joining us today with this interview.
Bye.